Russell, good to get you back on Real Vision. It's been a while now that you and I have chatted. You've chatted to Roger more recently. But I really wanted to catch up with your thoughts because you've definitely got divergent paths in how you're thinking about things and looking at a number of kind of different opportunities than maybe other people are looking at. And I always think it's interesting to pick your brains to see how you see the world right now.
Yeah, sure. Thanks for having me back. Real Vision's been very good to me over the years. We've really had a sort of unusual decade, in my view, where we have become accustomed to very slow growth, very low commodity prices, and a lot of the drivers of the decade before, so 2000 to 2010, which is when I was learning my trade, what you used to get was export volume growth, there was sort of structural demand. It was a China story, but there was a sort of broader EM story as well, which was sort of self-fulfilling. And really in the last decade, we've had the reverse of that. And so, coming into the 2010s, as it was, I was very much of the view that, deflation and low yields were going to be the environment we're going to be in, looking at Japan as a cue for that. And in general, that's been broadly correct. What has been very divergent, I think, particularly in the last 5 years, has been because of those low commodity prices and because both central banks, governments less to a degree, but central banks have decided that, asset price growth is essential to try and stop the deflationary story. We've had a very much different type of environment to what you saw in the Japanese market over the last sort of 20, 30 years when it had its deflationary sort of period. And in fact, so much so that, we've seen the advent of negative yields in bond markets. We even had the advent of negative prices for oil. Even though it was bullish bonds and negative commodity prices, they were a little bit outside of the sort of paradigm you're thinking about, if that makes sense. And so, from my perspective, it's very hard for anyone's model for how the world should look to make a lot of sense, because unless you explicitly knew that oil could be a negative price or yields could be negative out to 30 years for the Swiss bonds, it's very hard to believe that, there's a strong case for any model that we've had in the past working in the future. I think what we've seen with coronavirus is even more so. Certainly for me, no one has seen unemployment rise as quickly as it has. And it does unfortunately probably fortunately raise the possibility that we'll never see an increase in employment at the end of lockdown that we've ever seen before. And so you have, for me, a real, you have a lot of different things to think about. But I guess what I was trying to say, and in a way, I feel like this sort of interview with you may end up being like a bookend to the first interviews and series of interviews I've done with Real Vision, is one of the things I was really thinking about during March was that the coronavirus is unknown. It could come and go quickly, and certainly in places where you've had good testing and good healthcare, Australia, New Zealand, Cayman Islands, from the sound of it, it's already much past the worst. But the one thing in March that I really thought could change things a lot